The 17th anniversary of the launch of the GLD, which was the first real gold ETF, is coming up. It's November 18th, I believe. So that'll be the 17th anniversary. I remember this date very well because I wanted to have you on with me at the New York Stock Exchange, and I remember you declining because you were concerned that the SEC might object if you made any comments about it. I wonder if we could run this bite of that date and me bringing those gold bars, because you were very helpful with bringing those gold bars onto the floor with me. Let's see if we can run that bite for a moment.
Today, we're going to talk about something totally different. I'm going to talk about this. This is gold. This is a gold bullion bar here. It's 25 pounds. It's worth about $180,000, and I've got 3 of them here, along with a lot smaller amounts of gold, as well as these 2 burly guards I've been married to for the last half hour. Thank you, guys. Why am I talking about gold today? Because finally, a gold ETF is available. Today, for the first time, thanks to the World Gold Council and State Street, you are able to buy gold just like it's a stock.
And that was November 17th, 2004, about 25 feet away. And George, I wish you were there, but you were there in spirit, and you helped me get those gold bars on the floor, and I thank you for it. But what a monster it has become in the last 17 years, the GLD.
Oh, it's been an unbelievable ride. I'm amazed at how you don't seem to have changed a bit, Bob, in that 17 years, I have to say. I think I may look a little older than I did then, but that's just the game. If you remember, when you wanted me to come on your show was before we actually had SEC approval to launch. And that was the period when the SEC, of course, insists that we don't say anything to the general public about an ETF until the day that it actually launches and starts trading. That was why I had no choice but to turn you down, although it grieved me desperately to do so. You're an old friend, and I want to keep your friendship. But the moment that I was back in the country, I was traveling back from meetings with investors in Switzerland on the day of the actual launch, and I was on your show just as quickly as the SEC allowed me to be so, which was a matter of weeks after that particular time. You looked really comfortable holding those gold bars, I have to say. And I think it was a great way to open your show. Show people the product. There's nothing quite so bright and shiny as a brand new gold bar.
Yeah, well, not only that, but during that period, gold ETFs were still in the infancy, and it was very important for people to understand that you actually owned something, that you owned you owned stocks that were underlying when you bought the S&P 500. You actually owned physical gold in this case. This was not a gold futures contract. And, you know, today we sort of we talk about spot Bitcoin and Bitcoin futures ETFs, and everybody kind of understands that. Back then, that wasn't so obvious. ETFs were still very much in its infancy, and I'm very proud we were able to make a big deal about that in the beginning and play a part in educating people about about the revolution of exchange traded funds. That's why I have this show, because I believe so much in what ETFs are doing and the power of the ETF structure overall. You know, George, one of the complaints about gold is it doesn't generate any income. It just sits there. But there was a new fund out just recently. The people behind the U.S. Oil Fund, our old friends over there, they just launched the USCF, a United States Commodity Fund Gold Strategy Plus Income Fund. Now, this owns gold, but it also adds a dividend to it, a dividend component, by selling gold call options and then collecting collateral interest income on this. George, and Will too, can you comment on this? Now you get people who are trying to get a little kicker into your ownership of gold.
Yeah, Bob, when I was at the World Gold Council, we were doing our research on GLD back in the year 2000 until we launched in 2004. And one of the things people said to us, the 3 things they wanted, a product had to be as close a proxy as possible for the physical price of gold, the spot price. It had to be traded on a regulated exchange, preferably the NYSE, where it lists. And it also had to be 100% secure. If you're writing call options against something, there is always the possibility that a rise in price might mean that you are called away and you no longer own your underlying. So I think that this new ETF would not fit the criteria that investors told us they insisted on when we put GLD together back in the early 2000s. That's really the deal here.
That's a very good point. Will, are people deviating from the idea, or does this make sense in a modern way, as long as people understand what exactly George was talking about there?
Yeah, I think it's something that, people have always asked for gold with income. It's been, because obviously the asset does have income. But I think, as George said, it's important to stress that the reason why it doesn't have any income is because gold doesn't have any counterparty or credit risk. The moment you lend gold out, you can introduce an income component, but then you're introducing credit risk or counterparty risk. It's something that gold investors feel very strongly about. What I've always said is if you want to generate income, there are plenty of good ways to generate income. And if you want to have an asset of the highest quality, free from credit and counterparty risk, that's the role that gold plays.
Yeah, good point.
One of the beauties, Bob, of GLD is that there's a very, very deep and liquid options market in GLD. If people want to use options, then they can happily do so themselves. They can generate income by writing calls, knowing that the calls could be covered by their underlying holdings of GLD. And that's really the only ETF that can make that claim.